Question on your screen. Which of the following correctly define the criteria for micro and small enterprise? Right. So the criteria for micro and small enterprise has been asked. Option A micro enterprise has an investment in plant and machinery exceeding 10 crore and turnover not exceeding 50 crore. A small enterprise has investment in plant and machinery not exceeding 1 crore and turnover not exceeding 5 crore. Option C, a micro enterprise has an investment in plant and machinery not exceeding 1 crore and turnover not exceeding 5 crore, and a small enterprise has investment not exceeding 10 crore and turnover not exceeding 50 crore. That is option number C. Option D, a small enterprise has investment in plant and machinery not exceeding 20 crore and turnover not exceeding 100 crore. So what do you think is the correct answer? So let's analyze each and every option. So according to option A, micro enterprise has investment in plant and machinery not exceeding 10 crore. This is incorrect. This is actually the definition of a small enterprise. This is actually the definition of a small enterprise, because micro enterprise have much lower limit, right? If we talk about their investment, so their investment is less than 1 crore and their turnover less than 5 crore, right? So this is incorrect. Option B says a small enterprise have an investment in plant and machinery not exceeding 1 crore. So this is also wrong. This is actually definition of micro enterprise, right? So for micro enterprise, investment is less than 1 crore. If you talk about the small enterprise, right? If you talk about the small enterprise, you must know that for the small enterprise, investment range is less than 10 crore and more than 1 crore, and turnover is less than how much 50 crore, right? And more than 5 crore. So option C says that a micro enterprise 1 crore 5 crore, yes, correct, very nice, and a small enterprise 10-50, yes, this is also correct. So absolutely correct. This is exact definition as per the government revised MSME classification. And option D is also wrong, not exceeding 20 crore and 100 crore, this is wrong, right? So this is the condition for medium enterprise, right? For medium enterprise, 20 crore investment and turnover is 100 crore, right? So what we learned from this question, that micro enterprise 1 crore investment 5 crore turnover, a small enterprise 10 crore investment 50 crore turnover. If this investment or turnover crosses this limit, it fall into a different category which we call as medium enterprise. So this is a very important question which I ask every year. You should know the limits of each and every in terms of investment, in terms of their turnover, right? So the explanation is also provided here. You can see option C is the correct answer. Let's see the next question. What is the rate of guarantee fees charged under the credit guarantee scheme for micro and small enterprise, which is called CGTMSE, for loan exceeding 5 lakh to women entrepreneur? Very nice question it is. So credit guarantee scheme for micro and small enterprise, CGTMSE. So what is the rate of guarantee fee charged under the CGTMSE for loan exceeding 5 lakh to women borrower? Option A say 0.5% per annum, 0.75, 0.85 or 1%. 0.5, this is wrong. Option A is wrong. Option A is wrong because this is too low compared to the actual guarantee fee for loan exceeding 5 lakh. Option B say 0.75. This is also incorrect because while this percentage is close, it is still not the official rate charged under the CGTMSE scheme. Option C is absolutely correct, 0.85. Remember it. Under CGTMSE, if a woman entrepreneur take a loan of more than 5 lakh, the guarantee fee charged is 0.85% per annum of the limit sanction. Let me give you an example. What does this mean? Let's say मान लीजिए एक वुमेन एंटरप्रेन्योर ने 10 लाख का लोन लिया. Suppose an woman entrepreneur take a loan of 10 lakh under the scheme. So the guarantee fee will be how much? 10,000,000 multiplied by 0.85%. And what will that be? That will be 8,500 rupees per year. 8,500 per year, right? So this will be the guarantee fee. So this fee is collected to provide a credit guarantee, meaning if the borrower is unable to repay, the scheme help protect the lender from financial loss. So ये guarantee fee लिया जाता है वुमेन एंटरप्रेन्योर से, right? तो गारंटी फी कितना होगा? 8,500 रुपया गारंटी फी होगा 1 साल का, और ये फी कलेक्ट किया जाता है ताकि ये क्रेडिट गारंटी मिले. मतलब कि यदि बोरोवर अपने रिपेमेंट करने में असक्षम है तो ये स्कीम हेल्प करता है लेंडर को फाइनेंशियल लॉस से बचने के लिए. सो आई होप दिस मेक द कंसेप्ट क्लियर. द आंसर इज 0.85% ऑफ द per annum, right? And 1% is also incorrect, right? So what we learned, CGTMSE scheme provide guarantee coverage to bank for loan to micro and small enterprise. For loan above 5 lakh to women entrepreneur, the guarantee fee is 0.85%. And I request you, in your book you will see a table. आप एक टेबल देखेंगे और उस टेबल में सभी का गारंटी फी दे रखा है. प्लीज गो थ्रू दैट टेबल, right? Very very important from examination point of view. Now let's see the next question. Which of the following is the primary advantage of cluster based finance for MSME? what is the primary advantage of the cluster based finance for MSME? So before answering this question, let me tell you that if you are interested to, if you are looking for the content of MSME examination, I want to tell you that on our app, that is JIB and CIB Made Simple app, we provide unit wise theory PDF, unit wise MCQs PDF, previous year questions, right? So all these things have helped you to prepare for this examination in a less time and with less effort, because whatever MCQs have been provided, if you go through only them, they are more than sufficient. And if you want to get access to this kind of course which we call certification course in MSME, so you can WhatsApp me on this particular number. Let me write down the number here. So you can WhatsApp me on this particular number, or in the description section you will see the link, right? If the course link has been provided. Now let's come back to this question. Which one of the following is a primary advantage of cluster based finance for MSME? So let's answer this question. Cluster based finance. Option A, increase competition among MSME. Option B, risk mitigation. Option C, higher interest rate on loan. Option D, limited access to market. So what do you think? Let's analyze each and every option. Option A, increase competition among MSME. This is wrong, because cluster based finance does not increase competition in a negative way. Instead, it promotes collaboration. It promotes collaboration. Let me give you an example. मैं एक एग्जाम्पल लेके समझाता हूँ आपको. Imagine a group of small textile business worker working in the same industrial area. So a group of textile worker working in a working in a same business area. Instead of competing, they share resource, they share supplies, they share market information, helping each other grow. So this is incorrect. Competition नहीं बढ़ाता है. Risk mitigation. Yes, this is correct. This is correct. Cluster based financing help reduce risk. How does it mitigate risk? It mitigate risk by bringing MSME together, collaboration. Just now I have told you. For example, if one MSME face financial difficulty, bank are more likely to support them if they are a part of a successful cluster. बैंक देखिए, मान लीजिए कि एक MSME फाइनेंशियल डिफिकल्टी फेस कर रहा है, तो बैंक उसे सपोर्ट करेगी यदि वो एक फाइनेंशियल क्लस्टर के पार्ट हो. Right. So also group knowledge, shared business strategy help reduce financial uncertainties. Right. So that is why option B is the correct one. Option C, higher interest rate on loan. This is wrong, because in reality, cluster based finance often help MSME get better loan terms and sometimes even lower interest rate. समझ में आया? और ऑप्शन डी कह रहा है कि लिमिटेड एक्सेस टू मार्केट. दिस इज ऑल्सो रॉन्ग, because this opposite is true. MSME in cluster often have better market access because they can collectively negotiate with the buyer and supplier. So what we learned from this question, that cluster based finance help MSME. How they help MSME? They help MSME to reduce the risk. You can see the answer. They help MSME to reduce the risk. It promotes collaboration, not competition. It does not lead to higher loan interest, and it enhances the market access. So these are the benefit of the cluster based financing. Now let's see this question. What is the extent of guarantee cover for micro enterprise with a credit limit of above 5 lakh and up to 50 lakh effective from 1st April 2023? So very nice question it is. Some percentage has been given to you, right? So question is what is the extent of guarantee cover for micro enterprise with credit limit from 5 lakh to 50 lakh, right? So option A says 85%, 75%, 80%, 70%. So first option 85% is incorrect. Why it is incorrect? Because you know that the 85% guarantee cover apply only for loan up to 5 lakh. So if you have loan up to 5 lakh, then only this 85% coverage apply, right? This 85% guarantee cover apply for only for loan up to 5 lakh. In the case of micro enterprise, once the loan exceed 5 lakh, the guarantee cover is lower. Now option B says 75%. This is absolutely correct. As per the latest update effective 1st April 2023, the guarantee cover for micro enterprise with loan above 5 lakh and up to 50 lakh, right, up to 50 lakh, in this range 5 to 50 lakh, the guarantee cover is how much? 75%. Let me give you an example to make it more clear. Imagine if a macro business take a loan of 20 lakh. मान लीजिए किसी बिजनेस से 20 लाख का लोन लिया. If a macro business take a loan of 20 lakh, okay, now 75% of this amount, what will be? 75% कितना होगा 20 लाख का? 15 लाख. So 15 lakh is covered under the guarantee scheme. Remember, this 15 lakh is covered under the guarantee scheme, right? This 15 lakh is covered under the guarantee scheme, reducing the lender's risk. It obviously reduces the lender risk, right? Whoever is lending, it reduces the risk. So remember, from 5 lakh to 50 lakh, the coverage, the guarantee cover is 75%. And now option number C say 80%. This is also wrong, because you know 80% guarantee cover apply to only MSE located in the north east region. देखिए मैं एक क्वेश्चन से आपको कितना कंसेप्ट क्लियर कर रहा हूँ. मान लीजिए अगला सवाल पूछ दे आपसे कि बताइए कोई नॉर्थ ईस्ट रीजन में है तो उसको कितना गारंटी कवर मिलेगा, तो सही जवाब होगा उसका 80%. ठीक है, So this is the way of learning. From a single question we can create 4 other question, and there is a high possibility of them asking in the upcoming examination, right? And option number D says 70%. So the guarantee cover for micro enterprise above 5 lakh up to 50 lakh is not 70 but 75%. So what we learned from this question, we have just learned that up to 5 lakh the guarantee cover is, just wait a minute, up to 5 lakh it is 85%, from 5 to 50 lakh it is 75%, and if northeast region, right, MSE northeast region, then up to 50 lakh it is 80%, right? This is remember. And remember, from 50 lakh to 500 lakh, let me also know, you should also know this, in the northeast region we are talking about. In northeast region, from 50 lakh to 500 lakh, right, it is how much? It is 75%, because as the amount increases, guarantee cover decreases. That is the key point. So I hope this make your concept crystal clear. Now let's move to the next one. फ्रेंड्स, आपसे एक रिक्वेस्ट है, आपने यदि एमएसएमई का एग्जाम दिया और आपको यदि क्वेश्चन आंसर करना, आप यहाँ पे लिमिट देख सकते हैं, प्लीज गो थ्रू दिस लिमिट, सुपर इंपॉर्टेंट। आप इसका स्क्रीनशॉट भी लेकर रखिए क्योंकि ये सवाल बार बार पूछा जाता है। फ्रेंड्स, इफ यू वांट टू शेयर क्वेश्चन विथ अस, आप हमसे यदि क्वेश्चन शेयर करना चाहते हैं जो एग्जामिनेशन में आया है, तो यू कैन व्हाट्सएप मी ऑन दिस पार्टिकुलर नंबर, एंड आई गारंटी फॉर दोज कैंडिडेट हु विल शेयर क्वेश्चन विथ अस, आई विल प्रोवाइड यू स्पेशल डिस्काउंट ऑन एनी अदर सर्टिफिकेशन एग्जाम कोर्स, बिकॉज यू नो इन आवर ऐप वी हैव सर्टिफिकेशन एग्जाम कोर्स फॉर ऑलमोस्ट ऑल 6 सर्टिफिकेशन। हमारे ऐप में सभी 6 सर्टिफिकेशन कोर्स अवेलेबल है। तो जो भी लोग हमारे साथ क्वेश्चन शेयर करेंगे इस नंबर पे, तो उनको मैं स्पेशल डिस्काउंट प्रोवाइड करूंगा इस पार्टिकुलर कोर्स पे। नाउ लेट्स सी द नेक्स्ट क्वेश्चन। द नेक्स्ट क्वेश्चन दैट वी हैव is you can see that what is the composite loan limit for a small manufacturing enterprise. So very nice question. You know about composite loan scheme, we have talked about it earlier. So option A say 50 lakh. This is wrong because 50 lakh is a significant loan amount. It is not the upper limit for the composite loan given to SME, right? So this is wrong. Option number B says 75 lakh. This is also wrong because the limit is higher than 75 lakh. Option C say 1 crore. Yes, it is correct. You know, 1 crore composite loan limit for a small manufacturing enterprise is 1 crore. Now you might wonder what is this composite loan? Composite loan क्या होता है? देखिए, composite loan के अंदर वर्किंग कैपिटल भी आएगा। मीन्स जैसे वर्किंग कैपिटल आप जानते हो ना, डेली ऑपरेशन के लिए, इट इंक्लूड्स वर्किंग कैपिटल फॉर डेली ऑपरेशन, एंड इट ऑल्सो इंक्लूड्स टर्म लोन, right? It also includes term loan. Term loan is given for what? For buying equipment, for buying machinery. This term loan is provided. So that is why it is called composite, because it contains both the working capital part also and term loan part also. For example, if a small manufacturing unit want to buy new machinery worth 60 lakh, right, and that is term loan because they want to buy new machinery, and this is the part of their term loan, you know it very well. And also this manufacturing unit need 40 lakh, use 40 lakh for raw material and daily expense, that is working capital. So the total loan needed is how much? 1 crore, right? So which fall within the composite loan limit, you should remember it. And 1.5 crore is wrong. So what we learned from this question, that whenever you see this word composite loan, it means two things: working capital plus term loan, right? For a small manufacturing enterprise, remember, a small manufacturing enterprise, the limit is 1 crore. So this help MSME invest in equipment, technology and daily operation. So I hope this was clear to you. If it is clear, if you like the video, please hit the like button and do subscribe to our channel for such kind of content. Now let's see the next question. Very nice question. What is CGTMSE fee for loan up to 5 lakh for women and enterprise located in the northeast? Right. So option is say 0.5%, 0.75%, 0.85%, 1%. What do you think is the correct answer? First option 0.5%. This is wrong. 0.5%, you know that this is not the correct CGTMSE fee for loan up to 5 lakh. The actual rate is higher. Now option number B say 0.75% per annum. This is actually correct. You know what is CGTMSE? First of all, you should know the full form of it. Let me write it down. It stands for Credit Guarantee Fund for MSME, for MSE, micro and small enterprise. Credit Guarantee Fund for micro and small enterprise. You know, it provides financial security to bank when they lend to a small business, right? So whenever bank lend to a small business, so the CGTMSE provide financial security to the bank, right? So you know, for loan up to 5 lakh, the guarantee fee is 0.75%, and for women entrepreneur, it is also for women entrepreneur as well as enterprise located in the northeast region. Let's give you an example. So for example, if a woman entrepreneur take a loan of 5 lakh, suppose a woman entrepreneur take a loan of 5 lakh under CGTMSE, so her guarantee per year will be how much? 5 lakh multiplied by 0.75%, and if you calculate it, you will get 3,750 rupees per year. So the low fee structure encourage bank to lend to women business in the northeast by reducing their risk. Earlier what we talked about, इससे पहले भी एक क्वेश्चन था, याद है आपको? If you remember it, there was a guarantee fee. There was a guarantee fee, and this is the CGTMSE fee. So both are different. Guarantee fee was 0.85%, if you remember it, and here we are talking about CGTMSE fee, right, which is 0.75%. So the lower fee structure encourage bank to lend to women and business in the northeast by reducing their risk. So what we learned from this question, that CGTMSE provide credit guarantee to banks for MSME loan, and for loan up to 5 lakh, women and northeast enterprise 0.75%. For loan above 5 lakh, fee increase to 0.85%. You must remember it. For one more information I am providing you, that up to 5 lakh, if this is the 5 lakh, the CGTMSE fee is 0.75, and more than 5 lakh, CGTMSE fee is 0.85%. So I hope this make the concept clear. That okay. Now let's see the next one. So friends, next question is, what is the bank limit for working capital based on turnover method? Very simple question it is, right? I think you know the answer. So please answer it. Is it 10% of the projected sales turnover? Is it 15%, 20% or 25%? What do you think? So option number A says 10% of the projected sales turnover. This is incorrect. You know, this 10% limit is too low, right? ये बहुत कम है. Right, business need more liquidity to manage their daily operation. 15% is also low, right? Correct answer is 20%. 20% of the projected sales turnover. What does this mean? That means bank calculate working capital limit as 20% of the projected sales turnover. This ensure that business have enough cash flow to manage raw material purchase, salary paying and handling operating expense. Let me give you an example. एक एग्जाम्पल लेके समझते हैं इसे. मान लीजिए एक बिजनेस जो है सेल्स टर्नओवर को प्रोजेक्ट करता है. सपोज अ बिजनेस प्रोजेक्ट सेल्स टर्नओवर ऑफ ₹1 crore, right, for the year. So it projects sales turnover of ₹1 crore. Now bank will provide 20%. What is the 20% of 1 crore? That is 20 lakh. So bank will provide 20 lakh as the working capital limit. So this 20 lakh is the working capital limit, right? So this helps the business run smoothly without cash shortage, right? So option number D, 25%, this is wrong, right? Because you know 25% is higher than the standard percentage. So what we learn from this question? We learn from this question is that turnover method, in this turnover method, bank provide 20% of the projected sales turnover as a working capital. It helps business manage daily expense like salaries, raw material and operation. If projected sale is 1 crore, so working capital limit is 20 lakh. So I hope this make the concept clear, right? Now let's see the next one. The next one is, according to the investment criteria, a service enterprise is classified as a small service enterprise if its investment and equipment is up to how much, right? Option number A say 50 lakh. What do you think? This is incorrect. 50 lakh is too low to qualify as a small service enterprise. Instead, this amount is closer for the micro service enterprise. You know, service enterprise, if you categorize it, there is one called micro service enterprise. There is one called small service enterprise. So the question is asking you about the small service enterprise. So it is near the micro service enterprise. So this is wrong. What about 1 crore? 1 crore is also wrong. 1 crore is a significant investment, but it is not the correct upper limit for a small service enterprise. 2 crore is the correct answer, right? You know, a small service enterprise is defined as a business in the service sector whose investment in equipment does not exceed 2 crore. मतलब ये हुआ कि स्मॉल सर्विस एंटरप्राइज एक ऐसा बिजनेस होता है हमारे जिसका इन्वेस्टमेंट जो है खासकर सर्विस सेक्टर में, क्योंकि क्लियरली लिखा हुआ है सर्विस सेक्टर. So it is a business in a service sector whose investment in equipment does not exceed 2 crore. Right? How? This classification is very important because it helps business avail government benefit like subsidies, lower interest loan, and it differentiate MSME based on the investment capacity. Let me give you an example. मान लीजिए एक business, suppose a business in the IT service sector invest 1.8 crore, right, in the server, in the computer, in the software. Right. So suppose a business in the IT service sector invest 1.8 crore in the server, computer, software. So since the investment is under 2 crore, it qualifies as a small service enterprise and can access MSME benefit. Right. 5 crore is wrong. So what we learned from this question? We learned that a small service enterprise means investment in equipment up to 2 crore. Right. A small service enterprise means investment in equipment up to 2 crore. And micro enterprise have lower limit while medium enterprise have higher limit. So for example, if an IT firm invests 1.5 crore in equipment, it qualifies as a small sector enterprise. I hope this makes the concept clear. Now let's see the next one. For a small manufacturing enterprise with a good track record, collateral security can be waived up to, very nice question, right? 10 lakh, 15 lakh, 25 lakh, 50 lakh. 10 lakh is wrong. While banks sometimes provide collateral free loan up to 10 lakh, the actual waiver limit for a small manufacturing enterprise is higher. 15 lakh is also wrong. Correct answer is 25 lakh. Option number C is the correct answer. You know why? Because bank can waive collateral security up to 25 lakh for a small manufacturing enterprise that have good credit history. Track record means what? अच्छा credit history हो, consistently repaid loan on time, and a strong business performance record. For example, imagine a small business manufacturing electronic component, right? That has been running successful for 5 years. So suppose a small business manufacturing electronic component, it has been running successfully for the last 5 years. If they apply for loan up to 20 lakh, right, the bank may approve it without requiring collateral, making it easier to access the credit. 50 lakh is wrong. So what we learned, collateral free loan for a small manufacturing enterprise up to 25 lakh, right? So no need to place any property or asset for the loan within this limit. It encourages small business to expand without financial stress. So that is why collateral free loan is applicable. Now this is a great question. Let's answer this question. If an MSME unit hold a margin of 20 lakh and its projected sales are 400 lakh, what will be its working capital limit? Options are 40 lakh, 60 lakh, 80 lakh, 100 lakh. First try it yourself. पहले आप खुद से try करें, फिर explanation को सुनें. So the question is how to calculate this WCL. What is the meaning of WCL? Working capital limit. Bank use something called turnover method. You know about this? Bank use something called turnover method to calculate it. I think we have talked about it earlier. As per the turnover method, it says that working capital limit is equal to 20% of projected sale. 20% of projected sales. I think we know it, right? Now what is the projected sale here? Projected sales is 400 lakh. So what is the 20% of 400? 20% of 400 is 80 lakh, right? So the margin of 20 lakh, this margin is given 20 lakh. This margin is a part of the business own fund and does not directly affect the working capital limit calculation in this case. So it has no role to play here. So the answer will be option number 3. This is 20 lakh is just given to confuse you, right? So margin has no role to play here because margin is a borrower contribution. It has nothing to do with the working capital limit. So correct answer is option number C, right? So what we learned, that imagine a manufacturing unit expecting annual sales of 400 lakh. To run smoothly, it needs a working capital loan from a bank. Using the turnover method, the bank allow 80 lakh as a working capital limit, right? So what we learned, turnover method, working capital limit is 20% of the projected sale, and formula is quite simple, and margin does not affect this calculation directly. That is why just given to confuse you, right? Let's see the next question that we have. The next question is on your screen. You can see. Friends, if you want such kind of PDF, you can WhatsApp me on the number provided in the screen, right? We have such kind of previous year almost 3 to 5 sets available, which have been collected memory based. Now question is Khadi village industry considered part of micro and small enterprise irrespective of investment in plant and machinery? What do you think? Option A say yes, option B say no, option C say let's discuss. So let's answer this question. Option A say that yes, Khadi and village industry are always considered a part of MSE regardless of investment in plant and machinery. This is absolutely correct. KVI, in short we call this Khadi village industry as KVI, and this KVI is directly supported by the Ministry of MSME and KVIC. So Ministry of MSME supported and KVIC, which is Khadi Village Industrial Commission, supported. Unlike regular MSE, KVI unit are included under the MSE category regardless of their investment in plant and machinery. No matter what they have invested in plant and machinery, they will be included under KVI, MSE. They are included under micro and small enterprise category. So a special government scheme you might have heard like PMEGP. What is PMEGP? Prime Minister Employment Guarantee Program. And you might have heard of Spurthi. What is Spurthi? Let me show you. Option A is correct here. Let me show you what is Spurthi. You can see it here. So Spurthi, you can see it stands for, let me tell you the full form of Spurthi. You can see, a scheme of fund for regeneration. You can see a scheme of fund for regeneration of traditional industry and Prime Minister Employment Generation Program. These schemes, special government schemes are there which provide funding and assistance to this industry. And the government recognized the social and economic importance of KVI in rural employment generation. So they are always considered part of the MSE, no matter whatever they have invested in plant and machinery, right? So there is a Khadi Gramodyog Vikas Yojana. It is an umbrella scheme under two major components, Khadi Vikas Yojana and Gramodyog Vikas Yojana, aimed at development of KVI. You should know this because question may be asked, right? Option B say no, Khadi and village industry are not related to MSE. This is wrong. Option number C say Khadi and village industry are part of MSE only if they are invested in plant machinery below a certain limit. This is also wrong. There is no limit, right? So what we learned from this question, that Khadi and village industry is always part of MSE. No investment limit apply here. It is supported by Ministry of MSME and KVIC through various government scheme, and there are some program which I have just talked now, like PMEGP program, Spurti program, right? So which help in funding and rural employment. So unlike regular MSME, KVI is included under MSE without checking investment in machinery, right? That is the point. Now, what is the primary purpose of DRT? To handle civil dispute, to facilitate the debt recovery process for bank, to adjudicate criminal case involving financial fraud, and to provide legal representation for borrower in the court. So, what do you think? The primary purpose of DRT? DRT stands for Debt Recovery Tribunal, right? So, option A says that to handle civil dispute unrelated to the financial matter. Is it correct? No, because DRT are not general civil court. They specifically deal with loan recovery case. Option B says that to facilitate the debt recovery process. Yes, it is correct. You know that DRT were established under the RDDBI Act. You know about it. RDDBI Act. That is Recovery of Debt Due to Bank and Financial Institution Act 1993. And their purpose is to speed up the recovery of NPA and help bank recover large outstanding loan. And you know, DRT handle dispute of 20 lakh and above, right? So greater than 20 lakh or equal to 20 lakh and above, they handle the dispute, and appeal against the DRT decision goes to DRAT. You must know this. DRAT stands for Debt Recovery Appellate Tribunal. For example, let's suppose a business takes a loan of 50 lakh from a bank but fails to repay it. He does not repay it. Instead of filing a case in the regular court, which takes years to complete, the bank can approach the Debt Recovery Tribunal for a faster decision. That is the role of DRT. So option B is the correct answer here. Right. Let's see the next question. The next question and final question of today's session is, you can see, which organizations serve as the Federation for Small and Medium Industry in the West Bengal? So option A, West Bengal Micro Small Facilitation Council, Federation of Small and Medium Enterprise Unit, West Bengal MSME Development Corporation, and Khadi and Village Industry Commission. Correct answer is FOSMI, that is Federation of Small and Medium Enterprise. Right, you should know about it that this was established. This is the primary organization representing a small and medium enterprise in West Bengal, established in 1952. This focuses on development of a small industry and provide various services. CLCSS, right? Which of the following is covered under the CLCSS for MSME? So let's see the option that we have. The first option say providing. What is CLCSS? Credit Linked Capital Subsidy Scheme. First of all, you should know the full form, right? So option is providing working capital loan to MSME. So what do you think? See, this sound reasonable, right? But it is not correct for CLCSS. The scheme is focused on what? You know, the scheme is focused on technological upgradation, right? This CLCSS scheme is focused on technology upgradation, not general working capital loan. Such loan are usually handled by bank under other scheme like CGTMSE. Now option B says offering 15% subsidy on technology upgradation investment up to ₹1 crore. Yes, this is the correct answer. You know, CLCSS provide a 15% subsidy to MSME for upgrading their technology, making it their production process more efficient and competitive. You imagine a small manufacturing unit upgrading from manual to automated machinery. So a small manufacturing unit which is upgraded from, earlier it was manual system, and now it has been upgraded from manual to automated machinery, right? So if the investment is rupees 50 lakh, suppose the investment is rupees 50 lakh, so they can get 15% subsidy. 15% subsidy they can obtain, and that is how much? 7.5 lakh saved. 7.5 lakh rupees will be saved. So option C, B is the correct answer. Now let's see the other option we have. Option C says that again I am repeating this particular concept. This says that I have taken a small manufacturing unit which upgraded from manual to automated machinery, and investment is 50 lakh, so they can get 15% subsidy. I think 15% will not be 7.5 lakh. This will just be 50 lakh. Yes, 7.5 lakh. So they will get 7.5 lakh subsidy, right? So offering us 15% subsidy on technology upgradation investment up to 1 crore. Right, so this is CLCSS. Now option C says granting direct financial aid for MSME expenses. This sound helpful, but it is not a part of CLCSS. This scheme does not provide direct financial aid. It focuses solely on subsidies for technology upgrade. And option D says subsidizing raw material costs for MSME. This is unrelated to the scheme. CLCSS has nothing to do with raw material subsidy. So the right answer is option number B. So the key points which we come to know from this particular question is that CLCSS focus on technology upgradation. First of all, you should know that is focus on technology upgradation, right? And the second point is that it provides 15% subsidy on eligible investment up to rupees 1 crore, and it does not cover working capital loan. What are not covered? Working capital loan are not covered. Then aid, financial aid is not covered, or raw material subsidy are not covered, right? So these three things are not covered under it. Now let's see the next question we have. Let's MCQs. Question number 2, as you can see here, on composite loan. So the question you can see, which of the following statement regarding composite loan for MSME is not correct, right? So this is the question. So remember, we are looking for incorrect statement here, right? So let's see the first option. A composite loan of rupees up to rupees 1 crore can be sanctioned by bank under a single window. This is absolutely correct, because composite loan allow MSME to get funding for both working capital and fixed capital, right? Like buying, suppose you are buying machinery, that is fixed capital. So composite loan allow MSME to get funding for both working capital as well as fixed capital under a single application to avoid unnecessary paperwork. So let me give you an example. Suppose an MSME apply for 50 lakh. Suppose an MSME apply for 50 lakh rupees to buy machinery, right? And rupees 10 lakh for daily operational expense. For daily operational expense. So they get both under one loan, right? So a composite loan up to 1 crore can be sanctioned by bank under a single window for working capital loan as well as the fixed capital loan, right? Suppose MSME apply for 50 lakh to buy machinery and 10 lakh to cover daily operational expense, so they can get they get both under one loan. Now option B says that bank sanctioning a term loan must also sanction a working capital limit to avoid delays in production. Yes, this is also correct, because this ensures that when business invest in long term asset like machinery, they don't face cash flow problem, and they don't face cash flow problem for daily operation like paying for electricity or labor. Option C says that composite loan are provided only for purchasing raw material, not for machinery. This is incorrect statement, and hence the correct answer to our MCQs, because these composite loan are not restricted to just raw material. They cover working capital loan also like raw material, and fixed capital loan also like machinery. For example, imagine an MSME buying advanced packaging equipment while also needing fund to buy packing material. So composite loan can cover both. And option D says that, let's see the option number D, just wait a minute. Yeah, the RBI master direction dated July 24, 2017 governs the sanctioning of the composite loan. So see, this is correct, because RBI guidelines are crucial in regulating composite loan and ensuring MSME get the support they needed. So the correct answer to this particular question is option number C, right? That composite loan are provided only for purchasing raw material, not for machinery. This is incorrect, because this is the right choice of this question. So you should know that this composite loan cover both the fixed and working capital. Fixed capital also cover, working capital also cover, and they are sanctioned under a single window. You should know this is sanctioned under a single window. And term loan and working capital loan limits are combined to avoid production delay, and RBI master direction dated to July 24 governs composite loan. I hope this breakdown cleared up your doubt about the composite loan. If you really find it helpful, don't forget to like, share and subscribe for more simple and clear explanation. Now let's see the next question. The next question is regarding when a shareholder, who can be a shareholder in a public limited company, right? PLC means public limited company. Who can be shareholder? So friends, let's see the first option. Only the company executive can be the shareholder. This is incorrect, because public limited company are open to anyone who meets the investment requirement. Limiting shareholder to just company executive is not how it works. So for example, if only the CEO, CFO and a few executive could buy share, it would not be called a public company, right? Now the next option says only individual investor. See, this is also incorrect, because individual investor can buy share. Public company welcome a wider pool of investor. It welcome a wider pool of investor. Now option C says that only business partner and financial institution. Again, this is incorrect. Why? Because business partner and financial institution can invest, but they are not the only one who can. And option D says individual, business partner and financial institution. This is the correct answer. You know that a public limited company can issue share to a variety of stakeholder, including individual like you and me, business partner and financial institution like bank. Think of a company like a Reliance Industry. Its shares are bought by individual investor, mutual fund and other business like. So the correct answer is option number D, right? So let's summarize the key point. The key point here is that public limited company are open to multiple type of investor. Shareholders can include individual, business partner and financial institution, and they are not limited to executive or special investor category. I hope this explanation make the concept easy to understand. Now let's see the next question, that is our question number 4 from the previous year asked question. Now this is based on hand holding stage for rehabilitation of CGTMSE. So the question is, which of the following is not a criteria for a MSE account to reach the hand holding stage in the rehabilitation process? Very nice question. So let's answer this particular question. So friends, option A says that the delay in commencement of commercial production by more than 6 months due to reason beyond the promoter's control. So what do you think? This is correct, because if an MSME can't start its operation within 6 months, so suppose there is an MSE, it can't start its operation within the 6 months, right, due to uncontrollable factor like government delay or natural disaster, the account may need support through rehabilitation. Account has to be supported through what? Through rehabilitation, right? So for example, imagine an MSE factory delayed by heavy flood. So suppose heavy flood came and it delayed MSE factory. So this would qualify for hand holding support, right? This will automatically qualify for hand holding support. Now option B says that company incur losses for 2 years or cash loss for 1 year beyond the accepted time frame. This is another valid reason, because persistent loss indicate that business is struggling and may require intervention, right? So business is struggling and it may require intervention because the company is struggling, right? So for example, if a small manufacturing unit continues to operate at a loss for 2 consecutive years, so it becomes clear candidate for hand holding, right? So this is also correct. So question is, which is not correct, right? You should remember option C says that sales exceeding 75% of the projected level in terms of the value during a year. This is incorrect statement and hence the correct answer. If the sales are, suppose if the sales exceed 75% of projection, so sales exceeds 75% of projection, it shows the business is performing fairly well and does not require rehabilitation. Obviously, sales is larger than the 75% of the projection, so business is performing well. So why there is a need of rehabilitation? In fact, such business are considered as stable and successful. And option D says that capital utilization is less than 50% of the projected level in terms of quantity. This is the valid reason for hand holding, because the capital utilization is low. This is called low capital utilization. This is called low capital utilization. So the low capital utilization signals inefficiency of a poor market demand. If a business that projected 1000 unit per month is only producing 400 unit, it may need hand holding support, isn't it? So if the capital utilization is less than 50% of the projected level, suppose the business projected 1000 unit per month, business projected 1000 unit per month, but it is only producing 400 unit. So what would that be? It will need hand holding support, right? So the correct answer is option number C, right? So let's summarize the key point just now. So hand holding support is provided when business face delays, losses or underperformance issue, right? Then hand holding support is provided, and key triggers include delayed production, persistence loss or low capital utilization. Sales exceed 75% of the projection means the business is stable and does not need rehabilitation. I hope this makes your concept clearer. Now let's see the next question. The next question is based on SARFAESI. Under which act is the SARFAESI licensed? Very good question. So let's go through the option. The first option says BRA. This is incorrect, because Banking Regulation Act governs how banks operate in India, including rules related to their management, right? So this is incorrect. Option B says Companies Act 2013. Exactly, this is the correct answer. That SARFAESI registered as a company under the Companies Act 2013, and this act governed the formation, regulation, dissolution of a company in India. I am giving example, just like Tata, just like Infosys, right, are registered as company under the act. SARFAESI follow the same legal structure. And the last option C says SARFAESI, that is securitization and reconstruction of financial asset and enforcement of security interest. So this is a tricky option, because SARFAESI Act clearly defines the purpose of SARFAESI, which is to record charge on secured loan. However, it does not license SARFAESI. So suppose if a bank want to secure a loan against property, the details are registered with SARFAESI under the SARFAESI provision, but SARFAESI only provide the legal framework, not the licensing. And option D is RBI Act. This is absolutely incorrect, because RBI Act is mainly concerned with the regulation of monetary policy and the functioning of central bank in India. That is why option number B is the correct. So what is the key takeaway from this particular question? The thing is that SERSAI is a central registry that record information on secured loan to prevent fraud, and it is licensed under Companies Act 2013. SARFAESI provides its legal purpose but does not handle its licensing, and banking regulation and RBI Act are unrelated to its licensing. Right, so the question was regarding the licensing of that. Okay, I hope you are understanding each and everything. Don't forget to hit the like button. Right, if you really think that this effort is useful, I will bring more and more MCQ session on like this. Please proper explanation of each and every question, which will provide you conceptual clarity, and if you get such question in examination, you will confidently answer it. Now let's see the next question. The question is regarding the legal status of a business entity. Very good question it is. Let's see, which of the following statement is not correct regarding the legal status of proprietorship and partnership firm. So basically it is regarding the legal status of the sole proprietorship and partnership firm in India. Let's see the option. Option A says a sole proprietorship is not recognized as a separate legal entity from its owner. So what it is saying? It is saying that in a sole proprietorship, the owner and business are the same legal entity. What do you think? Is it clear? Is it so that in a sole proprietorship the owner and business are the same legal entity? There is no legal distinction between the owner personal finance and the business finance. Obviously, for example, if a shopkeeper takes out a loan for his business and can't repay it, his personal asset can be used to settle the debt. So that is why in a sole proprietorship is not recognized as a separate legal entity from its owner. Exactly, this is correct. Now option B says that a partnership firm is recognized as a separate legal entity from its partner. This is incorrect, and this is the correct answer to this question, because in India a partnership firm is not a separate legal entity from its partner. The partner are personally liable for the debt and obligation of the firm. For example, if a partnership firm default on a payment, creditor can go after the personal asset of the partner. Now let's see the option C. Just wait a minute. Yeah, I hope it is clear. Now option C they say that in the sole proprietorship the owner has unlimited liability for the business debt. Unlimited liability. So unlimited liability means if the business incur debt, the owner is personally responsible for paying them off, even if it means selling a personal property. Exactly. Suppose a sole proprietor run a bakery and he faces the loss. He may have to sell his car or house to settle the debt. And option D says that in a partnership firm, the partners share liability for the firm obligation. Yes, this is correct, because partners share both the profit and liability of the business. They share both. They share profit also, and they share the liabilities also. So if one partner default, the other partner can also be held liable for the firm obligation. So in a partnership of 3 people, if one partner disappear, the remaining 2 are still responsible for settling debt. So the correct answer to this particular question is option number B. Let me show you again option number B what it says. Option B says that a partnership firm is recognized as separate legal entity from its partner. No, this is wrong. So you should know that sole proprietorship and partnership firm are not separate legal entity. In both firm, owner or partner have unlimited liability for debt, and the incorrect statement is that a partnership firm is a separate legal entity. It is not, and partners share profit and liability equally unless otherwise agreed upon. Now let's see the next question. Under the SARFAESI Act, what is the minimum notice period that a secured creditor must provide to a defaulting borrower before taking the possession of the secured asset? Very good question it is, right? So we will break down each and every option, explaining in simple terms. So let's see the option: 30 days, 45 days, 60 days, and 90 days. So option 30 days is incorrect, right? 45 days is also incorrect. But the correct answer is 60 days. Let me tell you about the section number. About the section 13 subsection 2 of the SARFAESI Act. You should know about it. This section of the SARFAESI Act, it says that the secured creditor must issue a demand notice giving the borrower. So here the keyword, issue notice, the demand notice, right? Giving the borrower 60 days to repay the outstanding loan. What happens next? If the borrower does not repay or respond, the creditor can proceed to take possession of the security or secured asset under the section 13 subsection 4. So possession is listed under section 13 subsection 4, right? So here correct answer will be 60 days, right? So suppose a borrower default on a home loan. The bank send a notice Right, the bank send a notice demanding repayment within 60 days. If the borrower does not repay, the bank can take control of the property. Option D say 90 days. This is incorrect because 90 days is longer than the required notice period under SARFAESI. So the correct answer is option number C, that is the 60 days. You should remember this concept, very very important examination point of view. Now let's see the next question, that which of the following statement is not true regarding the difference between LLP and a private company in India. LLP, you know, is called limited liability partnership, and private company you are well familiar with. So option A says that LLP is governed by the Limited Liability Partnership Act, while the private company is governed by the Companies Act. What do you think? This is the correct. And you must keep in mind that not correct has been asked. This is correct. Why it is correct? Because you know LLP in India are regulated by the LLP Act 2008, while the private company are follow the provision of the Companies Act 2013. Now option B is, let's go to the option B. Just wait a minute, I'm coming to option number B. Yes, option number B is here. A private limited company must have its account audited annually, while the LLP exempted from audit regardless of its turnover. This is incorrect, right? This is incorrect. You should know that a private limited company must indeed get its account audited every year, right? Private limited company, or we can say PLC, must get its account audited every year, right? It should get account audited every year, right? So a private limited company must get its account audited every year, but saying LLP are completely exempted from audit is wrong. LLP are required to get their account audited. So see, LLP will get their account audited if the turnover exceed 40 lakh. So the condition for LLP to get account audited is that turnover should exceed 14 lakh or their capital contribution exceed 25 lakh. Capital contribution should exceed 25 lakh. For example, imagine an LLP making 50 lakh in turnover. Suppose an LLP is making 50 lakh in turnover. So it must get his account audited even though it is not a company. So the statement claiming LLP are fully exempted is incorrect. You can see what is it claiming. The statement is claiming that LLP is fully exempted from audit. No. How it is possible? They are not fully exempted. Option C says that a private limited company can raise equity capital from investor, where LLP cannot issue share to raise equity funding. See, private limited company can issue share to raise fund from investor, right? They can issue share. They can issue share. For what? They can issue share to raise fund. To raise fund from where? Investor. So they can issue share to raise fund from investor. On the other hand, LLP can't issue share. LLP cannot issue shares. Funding comes through partner contribution only, right? And so this is also what is say LLP cannot do. Yes, this is also correct. An LLP partner have the flexibility to manage the business directly, while in private limited company, director manage the private company on the behalf of shareholder. What do you think? Is it correct? Option D. In LLP, you know, the partner manage their day-to-day operation directly. In the private limited company, director handle management on the behalf of the shareholder. So the correct answer is option number B, right? So you should know that private limited company must have account audited annually, while where in case of LLP, this is wrong. So let's summarize the fact. They are governed by the different act. We know it about it. LLP needs audit if turnover exceed 40 lakh or capital exceed 25 lakh. Private limited company must get audited annually. Always. Private limited company can't issue share. Private limited company can issue share, but LLP can't issue share. And LLP partner manage directly. Company have directors. I hope this makes the concept clear. Now let's jump over to the next question, and which is a very nice question, right? It is based on which of the following is not one of the 5 C's of credit used by lenders to assess a borrowed credit worthiness. Not a 5. See the here the word not 5, right? So the first option say character. You know, character is one of the borrower, right? Character is one of the 5 C's of the credit. There is something called 5 C's, right? Character refers to the borrower trustworthiness and willingness to repay the loan. For example, lender assess your repayment history through your credit score and previous loan record to evaluate your character. The option B says capacity. You know, capacity is about your ability to repay the loan based on your income and financial obligation. The bank will check your income, expense and debt to income ratio before giving you a loan. Then the third option we have is capital. This is another important C, right? So capital refers to the borrower on money invested in the business or asset. If you are taking a business loan, the bank will check how much of your on money you have already invested. Option D say collateral. You know, this is definitely one of the 5 C. Collateral is an asset that the borrower plays as security for the loan. And what is the option E? Let's see the option E. Option E I think is compliance. Yes, compliance is not there. right? Because what are the 5 C's? Let me remind you what are the 5 C's. The first C is character, capacity, capital, collateral, and last is condition, like economic factor. There are some condition like economic factor. So the compliance, which refers to following legal or regulatory requirement, is not a factor in credit assessment. So 5 C's are character. Character means trustworthiness. Capacity means ability to repay the loan. Capital means borrower's own investment. Collateral means security for the loan. And condition means market or economic condition. Compliance is not one of the 5 C's. So these 5 C plays a crucial role for credit used by lender to assess a borrower creditworthiness. Now let's see the next question. Which of the following statement is not true regarding the common seal of a company? Very nice question. Common seal, first of all, let's see the options that we have. Option A says that the common seal is a mandatory requirement for all company under the Companies Act 2013. This is incorrect. This statement is not true, because that before 2015, common seal was mandatory. It was mandatory before 2015. But that Companies Amendment Act 2015 made the common seal optional for the company. Now it is optional. For example, some company may choose to have a common seal for executing official document, but it is no longer compulsion. Option B says that Article of Association may specify the condition under which a common seal could be affixed and a person authorized to do so. AOA is called Article of Association, is a document that outlines the internal rules and regulation of a company. It specifies when and how common seal should be used and who is the authorized to affix it. So this is point number B. Point number C says that MOA, it's called Memorandum of Association. MOA is called Memorandum of Association. So MOA does not typically provide provision about the common seal. So this statement is true. MOA outlines the company main objective, power, and scope of the operation. It does not usually contain provision about the use of the common seal. So MOA would focus on what the company is set up to do, like selling goods or providing service, but it would not mention how to use their company. And option D says the common seal is used to execute document on the behalf of the company. So this statement is true, because common seal is traditionally used to execute document and so that company official agree with the terms of the document. It serves as a company's signature on legal contract and other important paper. So the correct answer is option number A. So let me again summarize the fact which we have learned just now, that common seal is optional for company, right? Under the Companies Amendment Act 2015, the AOA can specify how and when the seal should be used. The MOE does not mention the common seal, and the common seal is used to execute legal document on the behalf of the company. I hope this make your concept clear, right? Now let's see one more question. So one more question is regarding the BEIS, which is the back end interest subsidy scheme for MSME in Tamil Nadu, for MSE in Tamil Nadu. Which statement is not correct? Which is incorrect? Basically the question is which is incorrect, right? So let's see. Let's see the correct options. First of all, first option says that the BEIS provide a 5% interest subsidy on term loan for a period of 5 years. What do you think? Yes, this is true, because this BEIS, or we can call it back end interest subsidy scheme. So this BEIS scheme offer a 5% interest subsidy on term loan, which means business will only need to pay 5% less interest on a loan for a period of 5 years. This help ease the financial burden on the small business by reducing their loan repayment amount. Let me give you an example. Let's say a small business takes a loan of 10 lakh. Right, 10 lakh a business loan is taken by a small business. So if they qualify for the subsidy, they will only pay 5% less in interest for the next 5 years. So again I am repeating that BEIS scheme offer 5% interest subsidy on term loan, which means business will only need to pay 5% less interest on loan for a period of 5 years. Right. Let's see the option number B. So which statement is not true? It is asked. Right. Option A1 is correct. Now option B, let's see. Option B says that a maximum subsidy amount is 20 lakh for loan up to 2 crore and obtained under the CGTMSE. So CGTMSE. So the maximum subsidy, yes, this is also correct. The maximum subsidy under BEIS scheme is 20 lakh, which is applicable to loan that are up to 2 crore. And the loan must also be obtained through the CGTMSE, right? CGTMSE design. For example, suppose if a business take a loan of 1 crore under the CGTMSE, they could get 5 lakh subsidy, 5%, right? For larger loan, they could get up to 20 lakh as a maximum subsidy. Now the next is option C, that BEIS is exclusively available for new micro and small manufacturing enterprise. So this is also true. This BEIS scheme is only available for the new micro and small enterprise, and it specifically target the manufacturing business. This means that only manufacturing business which are starting or are new can apply for this subsidy. Option D is incorrect, because this is the correct answer here, because BEIS is applicable to all micro and small enterprise service business. This is wrong, because BEIS is not applicable to service based business. Here it is written service based business, and you should know that BEIS does not apply to the service based business. Question is, where is the headquarter of NIESBUD located? First option say Mumbai. Mumbai is a financial capital of India, right? So it is home to major institutions like RBI, SEBI, BSE, but any NIESBUD is not a headquarter, right? Then Hyderabad. This is also incorrect. This Hyderabad, it is a famous IT and pharma hub, like Google, Microsoft, TCS. So these are placed in Hyderabad, but NIESBUD is not there. Noida is the correct answer. So the headquarter of NIESBUD is in Noida. It is an apex body under the Ministry of Skill. You must know it is under the Ministry of Skill Development and Entrepreneurship. It is MSD. We call it MSD, Ministry of Skill Development and Entrepreneurship. Right? That promotes entrepreneurship and skill development. Kolkata is also incorrect answer. So you must understand that the moral of this question is that NIESBUD headquartered is Noida or on Uttar Pradesh, and it works under Ministry of Skill Development and Entrepreneurship. It focuses on entrepreneurship and skill training, right? So that is the correct answer. Option number C is the correct answer. Now the second question is, CAMEL is used for evaluating the performance of, right? You might have heard about this CAMEL. This is an acronym, right? So friends, option A suggests mutual fund, option B bank and financial institution, stock market, insurance company. So please, do you know what is the correct answer? Option A, mutual fund. Mutual fund pool money from investor to invest in a stock, bond and other asset. So they are evaluated based on returns, expense ratio and risk factor. This is not the correct answer. The correct answer to this question is bank and financial institution. Yes, the CAMEL rating system is used to evaluate banks and financial institution. So sometimes question may be asked regarding full form. You must know the full form of CAMELs. What does C stand for? Do you know what does C stand for? C stand for capital adequacy. Let me write down the important point. So C stand for C stand for capital adequacy. What is the meaning of capital adequacy? Means does the bank have enough capital to handle the risk? This is called capital adequacy. What about A? A stand for asset quality. A stand for asset quality. What is the meaning of asset quality? See, are the bank loan and investment safe? That is called asset quality. M stand for management efficiency. M stand for management efficiency, which means is the bank leadership good? Then E stand for E stand for earning. What is the meaning of earning? That is the bank profitable. And this L stand for liquidity. Liquidity, you know it very well, that does the bank have enough cash to meet obligation? So just like doctor check your health using blood test, CAMEL rating check a bank financial health. C for capital adequacy, A for asset quality, M for management efficiency, E for earning and L for liquidity. So you must remember this formula, this full form, very very important. If we talk about option number C, that is stock market indices, this is incorrect. Some indices like Sensex, Nifty, and so they track the performance of group of stock, right? These are tracked by indices. So the performance depends on factor like market trend, investor sentiment, economic condition, not the CAMEL system. And insurance company, they are evaluated. Their insurance company are evaluated using solvency factors, solvency ratios, claim settlement ratios, and IRDAI norms. So the final summary is that CAMEL rating system is used for bank and financial institution. 5 key components are there: capital adequacy, asset quality, management, earning, liquidity. Right? That is the point. Now let's see the next question. Question number 3 is on your screen. As you can see, it says that the 5C are primarily used in which area of banking? Yes, you must be aware of this 5C, right? So they are used in which area of the banking, right? Option A, risk management. What do you think? Risk management in bank focus on identifying, analyzing and reducing the risk. What we do in risk management, in risk management part, what we do, we first identify, then we analyze, and then what we do, we reduce the risk, right? Like market, credit, operational risk. So while credit risk is a part of risk management, the 5C are specifically used in credit appraisal. So just like doctor checks your medical history before giving medicine, a bank check a borrower credit worthiness before granting loan. But this is a part of credit appraisal, not overall risk management. So this is wrong. Option number B say credit appraisal. This is the correct answer. So these 5 C's of credit are used in credit appraisal, where bank assess whether a borrower is eligible for a loan. So let us simplify what are these 5 C. The first C is character. The first C is character. What is the meaning of character? That means when I say character, it means the borrower past credit history and repayment behavior. The second C is about capacity. Capacity, what does it capacity means? Means the borrower ability to repay the loan based on income and existing debt. The third C is about capital. What is the meaning of capital? Like the financial strength of the borrower, including their own investment in the business or project. The fourth C is collateral. Collateral, it very well, that asset placed as security for the loan, like property, gold or fixed deposits. And the last C is about condition. So economic and market condition affecting the borrower ability to repay, right? So let me give you an example to make it more clear. Imagine a bank giving a home loan. So they will check your salary. So your salary, first of all they will check your salary, right? So your salary is like your character, right? So character means salary means your capacity, not character. Just wait a minute. Let me write down in correct place. So salary is just like your capacity, right? Salary is your capacity, right? Then they will also check your credit score. So credit score, so what is credit score? Credit score is like your character. Your score is like your character. Also your saving they will check. So they saving your like your capital, right? So they will also check, they will also place your house as security. So that is this house your collateral. And the real estate market will also check, that is called condition, before approving the loan. Option number C, CRM. This is wrong. That CRM is about managing relationship with the customer to improve service and business growth. It focuses on customer feedback, complaints and engagement, not loan approval. For example, if you visit a bank for a loan, the CRM system helps track your queries, but the loan approval depends on 5 C's of the credit. Option D says treasury operation. This is wrong, because treasury operation in the bank manage cash flow, investment, foreign exchange and liquidity. Treasury operation handle how much cash a bank has for lending, but who gets the loan is decided through credit appraisal using 5 C. So what we learned from the discussion is that 5 C of credit are used in credit appraisal to assess loan eligibility. 5 C means character, capacity, capital, collateral and condition. It is not related to risk management, customer relationship management or treasury operation. I hope this makes sense to you. Now let's switch our focus to our next question, which were asked on 8 March examination. The question, as you can see, if an individual CIBIL score is 750, what is the associate risk category? So before going into this question, let me tell you that if you are looking for MSME study material, we have a fully fledged course on MSME, from where students have cleared the examination, which have recently been held, right? In this course, you get unit-wise theory PDF, unit-wise MCQs PDF, as well as previous year question, right? Which provide you sufficient knowledge to equip you to with the knowledge, so that you can easily crack the examination. So if you want to get detail regarding it, you can WhatsApp me on this particular number, right, 82857381, to get more detail regarding the course, right? So the link of the course is also provided in the description section of this particular video. Now let's come back to this question. So friends, this question is about a CIBIL score and risk category. So option number is suggests high risk. So if we talk about the high risk borrower, a high risk borrower is someone with a poor credit history, meaning they will have defaulted on loan, or they will have very low CIBIL score, especially below 650. So bank hesitate to give loan to such individual. For example, imagine you have a friend who always borrow money but never repays on time. Would you lend them money again? Of course not. That is exactly how banks see high risk borrower. So a CIBIL score of 750 is not considered high risk. So option is wrong. Normal risk. Yes, this is correct. So CIBIL score of 750 falls under normal risk category. People in this range have a decent credit history, meaning, so let me write down, this is the key point, they have a decent credit history. It means that they pay their EMI, they bill on time, bank feel comfortable giving them loan, right? So you must know that if the credit history, if the CIBIL score is in this range, 300 to 649, it means high risk is there, risk is quite high. And if it fall in 650 to 749, so this is basically normal risk. This is basically, we can call it normal risk. And if it is 750 plus, it means that low risk, right? So for example, if you have CIBIL score of 750, it's like being a responsible student who submit homework on time. Your teacher, that is your bank, trusts you more than and gives you more better opportunity. Option number C is a low risk. Yeah, this is wrong, because typically have a CIBIL score above 800. These people have excellent credit history and get the best loan offer with lower interest rate. And very high risk, this is also incorrect. Why? Because the very high risk borrower have a CIBIL score below 500, and these individuals have frequent default, missed EMI, or loan settled with bank instead of full repayment, right? So if a student never submit assignment and fail at test, teacher won't trust them with responsibility. Similarly, bank don't trust borrower with very low credit score. So the final summary from this discussion is that CIBIL score is a measure of credit worthiness ranging from 300 to 900, right? 750 plus is a good score and fall under the normal risk category. High risk below 650, normal risk 650 to 750, 749 to be more precise. Now the next question is, which of the following is a primary role of KVIC? Very important question. What is KVIC? Khadi Village and Industries Commission. So what is the important role of KVIC? So this question is regarding KVIC. Option number A, promoting large scale industrialization, generating rural employment through Khadi and village industry, obviously regulating foreign trade policy, and obviously B number option is correct, because KVIC, which was established under the Khadi and Village Industry Commission Act 1956, is a statutory body focusing on promoting and developing Khadi and village industry to create employment opportunity in rural India, right? Strengthening the rural economy, preventing migration to urban area, and supporting decentralized economic development through skill development, technology transfer, R&D, and marketing initiative. Very easy. Now this is very important question. This question is regarding to PMEGP, Prime Minister Employment Generation Program. Who is eligible to apply for financial assistance under PMEGP? Very important question, that who can apply for financial assistance under PMEGP. So friends, PMEGP, Prime Minister Employment Generation Program. So option number A, an individual above 18 years of age with at least 8 standard pass for manufacturing project above 10 lakh and business service project above 5 lakh. So PMEGP is a government scheme that provides financial assistance. So when I say this financial assistance, what I mean to say is that it provides you subsidy and it provides you loan. Two things it provides, subsidy plus loan, right? Who can apply? Any individual above 18 years of age. If the project cost is above rupees 10 lakh for manufacturing or above 5 lakh for services, right? The applicant must have at least 8 standard pass, right? And there are some other eligible group also, right? SHG is also there, production based cooperative are also there, and charitable trust are also there. Let me give you an example. Imagine a person named as Raj. Want to start a furniture making unit costing rupees 12 lakh. He want to start a furniture making unit which costs rupees 12 lakh. Since this manufacturing project is above 10 lakh, he must have at least 8th grade education to qualify for this. That means option number A is correct. Option number B suggests only SHG and cooperative society. See, SHG, self-help group, society and cooperative can apply. They are not the only eligible entity. For example, if Ramesh as an individual want to start a grocery store, he can apply alone without being in SHG or cooperative society. Since PMEGP is not limited to just SHG and cooperative, that's why this option is incorrect. Option number C suggests existing unit under PMRY, REGP or any other government scheme. So PMEGP only fund new business, new product, new project are allowed. Existing units that have already received benefit under PMRI, what is the meaning of PMRY? That is Prime Minister Rural, it is a Prime Minister Rozgar Yojana. REGP, what is REGP? Rural Employment Generation Program. So existing unit that have already received benefit under this program, they cannot apply again. For example, if Suresh already received a subsidy for his small textile business under PMRY, he cannot apply for another subsidy under PMEGP. Option number D, any unit that has already availed a government subsidy under any other scheme. This is also incorrect, because if someone has already taken a subsidy under another government scheme, they cannot apply for PMEGP. For example, if a company got rupees 5 lakh subsidy under Stand Up India, it cannot apply for another subsidy under PMEGP. So what we learned from this discussion is that PMEGP provide financial assistance for new business. Individual above 18 years can apply. For large project, 8 standard pass is required. Self-help group, cooperative, charitable trust also eligible. Existing unit that have already received subsidy under other government scheme, they are not eligible, right? That is why fully fledged understanding is very much required. That's why I explain each and every option, so that you must understand what are the pros, what are the eligibility. Remember, this eligibility is very important. You can see eligibility written here, right? Now what is the minimum and maximum number of partner required in LLP? This is another good question based on which we are asked. What is LLP? Limited liability partnership. Option number A, minimum 2 partner, maximum no partner. Yes, correct. So what is the act? What is the act name? This is called LLP Act 2008. So it says that every LLP must have at least 2 partner. there is no maximum limit on the number of partner. There must be at least 2 DP. What is the meaning of DP? DP means designated partner, and at least one must be resident of India. Let me give you an example. Suppose 2 friends are there. One is Amit and other is Raj. So these 2 friends, want to start an IT consulting firm together. So they can register as an LLP with just 2 partner. Later they can add more partner without any upper limit. That is why option A is the correct answer. What about B? 3 and 50. This is wrong, because LLP require minimum of 2 partner, not 3, and there is also no maximum limit on LLP. So if only 2 people want to start an LLP, they can legally do so. The law does not require 3 partner. Minimum 2, maximum 200. This is also wrong, because a private limited has maximum limit of 200 shareholder, but an LLP does not have such restrictions. So you must know, if it has been private limited, then this option would have been correct. But since it is LLP, they have no limit on maximum number. 5 and 500. This is also incorrect. Right. So what we learned from this discussion is that LLP requires a minimum of 2 members or 2 partners to be registered. Remember it. So it should have at least 2 partners. Right. And that there is no maximum limit. There is no maximum limit on the number of partners in an LLP. At least 2 partner must be designated partner. DP, we call it DP. Right. And one must be resident of India. This is another condition. One must be resident of India. You must note it down. Right. And LLP are different from private limited company, which have maximum limit of 200 shareholder. Private limited company, they have a restriction of 200 shareholder max. That's it. So we can see we have learned 4 concepts from this particular question. That is the beauty of this learning, right? We don't only learn what is asked, we learn something different which may help you in upcoming examination. Now the upcoming question is, what is the full form of NIESBUD? I told you about NIESBUD in the first question. Remember it? Now it's full form. So friends, option A, it suggests National Institute of Employment and Skill Based Development. This is wrong. Right. Option B says that National Institute of Entrepreneurship and Small Business Development. Yes, it is correct. Very good. It is correct. Option number B is the correct. So let me talk you something about this NIESBUD. I told you it is under MSDE. MSDE, Ministry of Skill Development and Entrepreneurship, Government of India. Its headquarters is in Noida, Uttar Pradesh. It plays a major role in training and promoting entrepreneurship and small businesses. It provides workshop, training, program, skill development initiative. Let me give you an example. Imagine you want to start a small business. Suppose that you want to start a small business, right? But you don't know how to get funding, market your product, or manage account. So NISBUD provide you training program to help you learn all these skills, right? Option number A is wrong, right? So option number C is also, so option number B is the correct. I hope we don't require explanation of all the option, because only one option is correct, which is entrepreneurship. Now let's switch our focus to the next question. Very good question. Which of the following is not a component of new MSME Champion scheme? Very, very important question. You know about this new MSME Champion scheme? MSME Sustainable, JDD, MSME Innovative, MSME Competitive, MSME Export Promotion Scheme. Correct answer is MSME Export Promotion Scheme. So you must remember that this champion scheme consists of 3 main components. When we first component is MSME Sustainable, ZED. What is ZED? Zero defect practices to promote sustainable and environmentally friendly manufacturing. This is called zero defect practice. The second part, is called MSME Innovative. What is innovative stand for? Incubation, right? It support incubation, intellectual property right, designed to encourage innovation in MSME. And the third is competitive. It aims at improving efficiency, competitiveness through lean manufacturing technique. So you must understand these 3 parts of this champion scheme, right? So this promotion scheme is not a part of champion scheme. Now the next question is under the TECHUP. TECHUP means technology and quality upgradation. What is the maximum financial support provided by Government of India for implementing EET, that is energy efficient technology? Very important question. This was asked in March 3rd examination, March 8th examination. So friends, how much financial support does the Government of India provide under this scheme? So friends, option number A suggests 50% of the project cost up to 20 lakh. This option overestimates the government financial support. The scheme does not provide that much, right? Option B, 25% of the project cost up to 10 lakh. Yes, this is correct. So first of all, you must know that TECHUP scheme is a part of National Manufacturing Competitiveness Program, which is called NMCP. What is NMCP? National Manufacturing Competitiveness Program, right? It aims to help MSME adopt energy efficient technology, that is called EET, right? EET, to improve their production process, and the government provide 25% of the project cost with a maximum cap of 10 lakh per project, right? The project must show at least 15% energy saving to qualify for funding. The project must show at least 15% energy saving For example, suppose a small factory want to replace old machine with an energy efficient one costing rupees 40 lakh. So a small manufacturer, a small factory want to replace old machine with energy efficient one costing 40 lakh. Under this scheme, 25%. What will be the 25% of 40 lakh? Please let me know in the comment section. So 25% of 40 lakh means 1/4 of 40 lakh, which is nothing but 10 lakh. So the 10 lakh is the maximum support which allow. Means the government will allow, provide 10 lakh and the business owner will arrange the rest. That's why option number B is correct, right? Up to 10 lakh. Option number A suggests 50% of the project cost up to 20 lakh. This is incorrect. For example, if MSME apply for 20 lakh in funding, the government will only approve 10 lakh, not more. Option C, 100% of the project cost. This is also incorrect. So if a business want to install solar panel costing rupees 4 lakh, the government will only contribute 25%, that is 1 lakh, not 4 lakh, and no financial support. This is also incorrect, right? This is completely wrong because the government does provide funding under TECHUP. If MSME has to bear the entire cost of upgrading machine, many small business would not afford it. That is why government steps in. So what we learned from this question, let's summarize finally. So let me give you the summarization here. You know, this TECHUP scheme is a part of NMCP. What is NMCP? National Manufacturing Competitiveness Program. First point. Second point, it helped MSME adopt EET, that is energy efficient technology. Second point. Third point, that it government provide 25% of the project cost up to rupees 10 lakh. Fourth point, the project must show at least 15% as per the DPR, as per the detailed project report, right? I hope that makes sense to you. Please hit the like button if you really think that till now your concept is clear, because it takes lots of effort to gather all this information, to collect the information from the students who have given the examination and provide you input. Now let's see the next question. Under which legal framework are SSIDC typically registered? You know what is SSIDC? SSIDC stands for State Small Industrial Development Corporation, right? Option A, Companies Act 1956. Very good, that's the correct answer, right? You know, SSIDC are government owned corporation. First thing first, they are government owned corporation, right? They are set up by state government. Who set them? They are set up by the state government. Why is state government set them? To support and promote small industry, right? To promote a small industry, right? They are typically registered under the Companies Act 1956, which provide them with proper corporate structure. So this helps them function as organized corporate entity. The main activity includes, you know, providing land, providing machinery, providing raw material. To whom? To a small industry, right? It helps MSME with financial aid. For example, suppose a state government want to help businesses in its region. So instead of setting up multiple small agency, it register SSIDC under the Companies Act. This make it a structured organization with a clear objective and rule. Option number B, Indian Partnership Act. This is incorrect, because you know SSIDC are not partnership, they are government owned corporation. For example, a small textile shop run by two partners under a verbal agreement come under the Partnership Act, but a state industrial corporation need a strong legal structure. That is why it is registered under Companies Act. Option C, Limited Liability Partnership. This is also incorrect. You know, LLP are privately formed business, while SSIDC are government owned organization. So if two professionals like CA firms or law firms want to start a business together with limiting their liability, they can register under the LLP Act. And what about the Cooperative Society Act? This is also incorrect. You know that in this act, member pool resources for mutual benefit. So SSIDC are not cooperative. So what is the final summary? What we learned from this discussion is that, let's summarize the fact. So this is the learning. So SSIDC is a government run organization that promote a small industry. They are registered under Companies Act, right? The correct answer is option number A. That's it. Now let's look at the next question. This question is regarding TUF, that is Technology Upgradation Fund, is primarily implemented in which sector? So I will tell you every information about this TUF, Technology Upgradation Fund. So option number A, textile. Yes, very good. It is T for textile, T for TUF. This way you can remember. You know, it is a government TUF. You know, it is a government scheme. First thing first, it is a government scheme, right? It is a government scheme that modernize the textile sector. It provides financial assistance for upgrading machinery, for adopting energy efficient technology and improving productivity. And you know, Ministry of Textile, right? Ministry of Textile launched this scheme to help Indian textile industry compete in the global market. For example, imagine a small textile factory. For example, you can imagine a small textile factory, right? Using old weaving machine. So with TUF support, the factory owner can buy modern automated tools, looms at a lower cost. This increase production speed and quality, helping business grow. Option B, food processing. This is incorrect. Food processing, you know, there are some scheme like PM Kisan Sampada Yojana, Mega Food Park Scheme. So TUF is not related to food processing. Automotive, this is also wrong. There is some scheme called FAME scheme. You might have heard about this FAME scheme. What is FAME scheme? That is faster adoption and manufacturing of electric vehicle, right? So a company making electric car will get benefit under FAME scheme, not TUF. And for IT, there is something scheme called STPI. STPI, you know, Software Technology Park of India, right? So the final answer is, you know, final answer is textile. T for textile, T for technology upgradation fund. This way you can remember it. Now, what does UNIDO stand for? So its full form is United Nations Industrial Development Organization. I am skipping this question because it's very easy. Let's look at the next question. Very, very important. Which of the following best describe the purpose of asset turnover ratio? Right, asset turnover ratio. So the question is, what does this ratio tells us and why is it important for businesses? So option number A suggests that it measures a company debt relative to the asset. You know, this describe the debt to asset ratio. So option number A describe, you know, debt to asset ratio. It describe debt to asset ratio, right? The debt to asset ratio tells us how much of a company asset are financed through debt. Let me give you an example to make it more clear. For example, if a company has 1 crore in total asset, if company has 1 crore in total asset and rupees 50 lakh in debt, so the DA ratio will be 50%. So this does not measure efficiency in generating revenue. So option A is incorrect. Option B suggests it indicates how efficiently a company uses its asset to generate revenue. Yes, this is the correct answer. This is what is the purpose of asset turnover ratio. So this asset turnover ratio, it tells us how efficiently a company is using its asset. So suppose this is the company, it is using its asset to generate revenue. So the formula of asset turnover ratio is net sale upon average total asset. Net sale upon average total asset. So higher ratio means the company is using asset efficiently to generate the sale, and lower ratio may indicate underutilization of asset. For example, let me give you an example to make it more clear. Suppose there are two shops selling mobile phone. This is shop A, this is shop B. So shop A has asset worth rupees 10 lakh and shop B also has asset worth rupees 10 lakh. But shop A generate 20 lakh rupees in sales and shop B generate only 8 lakh in sale. So shop A has higher asset turnover ratio, meaning it is using its asset more efficiently as compared to shop B. That is why option B is correct. Option C, it reflects the company profitability by comparing net income to total asset. Option number C. See, this is called ROA. When I say ROA, return on asset, it is nothing but net income, that is called net profit upon total asset. This is called ROA. This is not called asset turnover ratio. So this tells us how much profit a company earns per rupee of asset. For example, if suppose a company has 10 crore in asset, and suppose it earn rupees 1 crore in net profit. So what will be its ROA? It will be 1 crore upon 10, or we can say 10%. I am again repeating. Suppose 10 crore a company has it in form of asset and it earn 1 crore revenue, right? 1 crore net profit. So its ROA will be 10%. So option C suggests about ROA, that is return on asset. So this is also incorrect. Option D suggests it assesses the liquidity of company by comparing current asset to current liability. So this is called current ratio. This is called, you know, current ratio, which is CA upon CL, current asset upon current liability. For example, if a company has 5 lakh in suppose current asset and 2.5 lakh in suppose current liability, right? So its current ratio will be how much? Its current ratio will be 2, which means it has twice the asset needed to cover short-term debt. So this measures liquidity, not efficiency. So option D is incorrect. So what we learned from this discussion is that we have learned regarding the asset turnover ratio, right? So asset turnover ratio, the formula for asset turnover ratio is sales in the numerator upon average total asset in the denominator, right? It shows how efficiently a company use asset to generate revenue. And if this ratio is higher, it simply means that it means that better efficiency, lower ratio means underutilization. So if this asset turnover ratio is higher, it simplifies that company is using its asset more effectively, and if this ratio is lower, it means underutilization of asset, right? So it is not related to debt, it is not related to profit, it is not related to liquidity. So friends, if you want to make more such videos, make the part 2 of this particular video, that is raised question, please write yes in the comment section. I will come to know that yes, you are interested in such kind of content where every concept, I don't only tell you the correct option, I explain each and every option using example possible, so that you have conceptual understanding. Our main focus is conceptual understanding. You should know what is the meaning of asset turnover ratio. You should know what is the meaning of this so-called current ratio. You should know what is the meaning of this so-called ROA, return on asset. Every aspect we touch upon. If you want me to make the part 2 of this video, please write yes in the comment section. And I request you, if you want a study material, feel free to WhatsApp me on this particular number to get more detail regarding the study material. Thank you for listening to this lesson. Hope it will help you in your upcoming examination. All the best for examination. Thank you.